This is Eric Mother, Mother.com, January 30th, 2020. As we come to the end of the month, keep in mind those monthly charts are going to start playing a major role in this market, something we've discussed, in fact, for many months. Anyway, let's take a look at the small time frame. And this is the S&P 500 as of the close of yesterday. And there's one value we should always be looking towards for guidance. So this is yesterday. S&P 500 closed with its daily RSI at 53. Now this is significant because we've seen the market start to get a little bit on the volatile side. All right. And the reason is because we are trading around the RSI 50. That's why. And also don't forget that it also means on the day you move above 50, you tend to have a big move to the upside, which is exactly what we got. About 2 days ago, the market had a nice reaction to the upside. And don't forget the day before that, we had a substantial pullback on a day-to-day basis because the market moved below RSI 50. So today, if we take a look at the SPX, as of right now, we are moving below RSI 50 for the day, which generally means high probability of closing at the lows of the day with a big down day. That's what it means. Now, if you're new to this concept, well, welcome and thank you for thanking me, because I am showing you something you might not be aware of. So this is the line we've been watching. What happens on this line as far as the RSI is concerned is definitely going to impact the market. Now, I should say, because we are dropping below 50, this is going to be a big down day into the close more than likely. But let's go back to this line. This line, I've been showing you this line over the last couple of days. This is going to determine where the market goes. A break of this line and you see a big drop. The market starts behaving differently. At the same time, there's nothing stopping this market from finding support. After all these games, there's nothing stopping the market from finding support around RSI 50 and generating enough energy to ultimately bounce to the upside and actually make higher highs. So whatever happens on this line is determining the next major trend. We can take a look at the 2 hourly, which is also showing the same line from a different vantage point. Draw it like that. And you can see from this vantage point, we are seeing a nice support on this line, even as the market is attempting to break down. Again, on the 2 hourly, if we can find support on this line, guess what? This is as low as we go, we are going to bounce. Now, because the market has had a big run over the last couple years, a break of this line is not out of the question. We break this line and I start to see the possibility of the market eventually starting to behave in a bearish tone. Expect big moves to the downside. Now, let's take a quick look at another area of the market, which is the transports. The reason why I want to show you the transports on the daily is because as of right now, the transports are showing a break of the trend line. Now, I have to preface this by saying, be careful when you are considering the Dow transports. They are used to trick us into taking the wrong trade. So let's just keep that in mind. Dow transports, you can watch them, but don't put too much weight on this, because the Dow transports are very good at confusing us. And the reason why this is the case is because we've been told that the Dow transports can be giving us early signs of what to expect. And so they use that against you and I. But continue watching this. The more the Dow transports are breaking, the more the market could actually be going in that direction. Again, take that with a grain of salt. If you take a look at the 2 hourly on the Dow transports, we see that that line that we are watching on the SPX is coming in play right there. And if this is breaking, it might suggest the general market is not far behind. But again, we don't want to put too much weight on the Dow transports. Dow transports are always going to be used to confuse us. But if we see the other markets trying to play the same game and moving lower, for example, yesterday I was talking about a different market. You might think these markets are not connected, but they are. Take a look at the Canadian market. It so happens that if you know what you're looking for, that they are also showing the same look as US market. So the 2 hourly on the Canadian market was finding support, and right now looks like it is breaking. Right, so that does kind of line up with the Dow Transports. We take a look at the daily for the Canadian market, and here we can also see the same thing that was holding this market together as of the last couple of days, as of right now, is ever so lightly breaking. So you start lining all these things up, I would venture to say maybe these markets are beginning to confirm that bearish look. Now I have to go to the SPX one more time, because the big picture is the most controlling. So the S&P 500 right now at 29.24, and I'm sure you're tired of hearing this, but in time, after everything has settled down in the months ahead, you're going to be lucky and grateful that you were aware of this situation. If the S&P 500 ends up failing to hold RSI 69.1, if it fails, and let me put it the best way to characterize this, if we end up having uniform activity rejection, again, the uniform action rejection is the key. If we end up having uniform action rejection around here, as far as the S&P 500 is concerned, and we start pointing down, I say look out, or look down, because this is gonna be a massive setup for a gigantuan bear market. All right, we need to understand that the same people, the same forces behind the scenes that took this market from here to here, the same people are also aware of energy having an opposite. So for every positive, there's a negative. After a period of light, there's going to be a period of darkness. They also do understand that things have seasons. So what I'm trying to sensitize you to is understand that just because the market went higher and was manipulated higher, the same people understand that they need to adhere to natural principles and that there should be the opposite move, and they are going to be doing the same manipulation, only that this time it's going to be a quick, swift move to the downside. It's only a question of when do they pull the plug, but they will, trust me. And by the way, the last couple of times that we've had RSI 69.1 uniform activity rejection, and remember, as I stated, it's not that it is just RSI 69.1 rejection. The key is that it has to be also uniform action rejection. And for some reason that seems to give a better signal. And you can see here the other period where we had RSI 69.1 rejection was here, just towards late 2007. So if you're bullish, you don't want to see RSI 69.1 rejection taking place on a monthly chart, because that would bring this bull market to a summary conclusion. And as I stated in a recent video from this week, be open to the idea of seeing 800 point down on a day-to-day basis, 1,000 point down day, 2,000 point down day on the Dow. It's gonna come. It's just how bear markets behave. All right, a 4% drop in the Dow is nothing in a bear market move. Even a 6% down day, it happens. So be aware these things can take place, might take place, if we end up seeing RSI 69.1 uniform activity rejection. And let me end with just one other observation. Take a look at the VIX and kind of revisit that chart I was showing you. And this is, so the look here is, the number to watch is 18.23. And this is the daily closing high from the VIX from Monday's down day in the market. The reason why I say, of course, to watch that is, of course, we have this flattening out of the moving averages, hence the more divergent breakout setup. So if the VIX can clear this number and stay above it, so that's, the VIX has to do this. If the VIX wants to move higher, it has to hold above 18.23 and stay above it. And it would also be more powerful of a move if the VIX itself on a daily chart can move above that RSI 69.1. If those two things happen, if we have a price breakout above this number, and if the VIX stays above 69.1 on the daily, expect the market to stage a massive move to the downside in the short term as we end the month, and as now the monthly charts start looking, a little different if this is the setup. Now keep in mind, maybe I should conclude with the other major averages, which is the Dow. Let's take a look at what the Dow looks on its monthly chart. And we can see the Dow is really already showing rejection. The Dow is 3 points away right now from, about 3 points away from being negative for the month. So month to month, if we draw a line right there, the bulls don't want the Dow showing rejection around here. Now keep in mind, this is something that's playing out. So there's nothing absolutely that is going to prevent the Dow from staging a move back above 69.1. And if the Dow can recapture the 69.1 level, of course that means we continue playing quality momentum breakout. So either or, whichever way it plays out, resistance is bearish for sure on the monthly RSI line, and a movement back above 69.1 means we continue being bullish, and we play the market by playing momentum quality breakouts. And of course, from a month-to-month basis, we'll continue monitoring the NASDAQ. It is still above 69.1. In fact, let's take a look at a closer view. Oh, by the way, just visually, you can tell this is so extended from its moving averages that it is due for a pullback. And we can take a look at the three-year monthly. So whatever happens here month to month is going to determine the next major trend. If we end up seeing uniform activity rejection month to month, then that's the bearish look that I'm talking about. All right. If the Canadian market struggles to hold this level here on a month-to-month basis, if this is as far as it goes on a monthly chart, this is also not good. And I'll just show you a couple areas here. Resistance on this line give us the top of 2008. Uniform activity rejection for the top of 2011. In fact, even here we can see the RSI top side on the monthly chart for the NIFTY. So the more we continue showing that resistance, the more this is definitely a market that is setting the stage for a major bear market move, or it can clear that line to advance this to brand new all-time highs. And I think that right there defines the forces that are in play. Keep in mind, we are trading with the RSI showing rejection just around the RSI 61.8, which means any resistance around here is meaningful. Now we take a look at the weekly. Of course, we can see here the threat is that this breakout on a weekly basis might end up failing, right? still above that breakout level, so let's not write too much about that. But if we take a look at the daily, just like we saw with the Canadian market, US markets, the Dow transports, all of the daily charts, there's a line here that has been trying to hold but is ever showing signs of cracking. If it cracks, expect continued move to the downside. The more we stay below the 50-day moving average, the more pressure stays to the downside. And just one other look, which is on the 2-hourly, something we've seen pretty much on all the charts we've looked at, is on the 2-hourly. There is this line of support that needs to hold. If this line can hold, then expect there to be a recovery move. And if these markets are now new for a new phase, a new era, then definitely we are going to see a break of this line, and that's going to open the floodgates. And when they open, they're going to open in a big way. This is Eric Moore with Mother.com. As always, good luck, peace, and blessings. E-A-C.